BNY profits beating estimates for the quarter, thanks in large part to a jump in fees. Still shares flat this morning on the beat. CEO Robin Vince joins us here at Post 9. Welcome back. Good to see you.
It's good to be with you.
I mean, you do continue to see some nice growth. What's driving it?
Yeah, well, it's the people of the company. We are collectively pulling together. We've de-siloed the company. We've got two big transformation projects, our commercial model, our platform's operating model. We're bringing AI in. We're serving customers better. And the combination of all of those things is really delivering results. Customers are excited. They're doing more business with us, and you can see it in the results.
Does it say anything about the operating environment we're in, which has also been a good one for banks?
Yeah, it's been a good backdrop. I talked about this on our earnings call an hour or so ago. We are seeing exuberant markets for sure. Tighter credit spreads, low rates, obviously strong performance of the equity market. And the backdrop helps, but we've diversified the company away from just being about market up, market down, what's happening with the rate curve. We've got all these different businesses, lots of different cylinders in the engine.
Maybe go into that a little bit more, because it's not, I mean, you're not like a JP Morgan necessarily or Bank of America, where it's lending to consumers.
No, that's right. We're not a retail bank. We're also not an investment bank. We used to be a trust bank, but actually the breadth of our platforms, we really provide financial infrastructure to enable capital markets all around the world. That's what we do today. We have these different platforms. And in fact, if you look at our business, 2/3 of our pre-tax income comes from businesses that aren't traditional trust bank businesses. We used to be known as a trust bank. We've really evolved and transformed away from that now.
When you say de-siloed, I'm always curious. How siloed were things, and how far along are you in that process of de-siloing?
We were right up there, to be honest, on silos. And so we had all of these great businesses, but they were vertically integrated. They were almost like they were just subsidiaries that we owned as a holding company. That's who we were. And our customers were frustrated by that because we do these dozen or so different things. We're this huge collateral manager. We're a great transaction services bank. We provide all these wealth services. We're an investment manager or a wealth manager. We are the largest custodian in the world. We do these different things. But customers would come to us and they would say, hey, you know what, there's this thing. I think it's hiding behind the curtain, but I can't quite get to it. And so that's what our platforms and our commercial model transformations are all about. Making it easier for customers to access what we have, blending those capabilities together, and really delivering as one company. And it sounds simple, it's hard to do, but it's very important, and our customers have really responded to it, and so now we're unlocking the power of the company.
Can you go into digital assets and sort of this trend toward tokenization and how that plays into the business model a bit?
Yeah, sure, Carl. It's a really important trend. It's one of the megatrends. We identified a series of megatrends about a year ago, and we said we want to position our business, invest in those capabilities that will allow us to benefit from those megatrends. Because while we want to drive and are driving organic growth, we also want to make sure that we're attaching ourselves to these big market cycles, and digital assets is one of them. Now, that's not just stable coins, it's also tokenization, and it really is across the ecosystem. If you think about what we do, we provide financial market infrastructure capabilities to our customers. And so it's stablecoin firms. We've been leaning in, helping them. They need traditional services as well as the stablecoin services. We've been helping with tokenization. We just launched a partnership with a new on-chain money market fund. So we've been investing around the ecosystem for using our traditional assets and then evolving our traditional business assets to be able to be on-chain as well.
Right. Is regulation a drag on that, or are they keeping pace?
I would say it used to be a drag, but under the new administration, it's actually become a bit of a tailwind. The new administration has got a point of view around AI, around digital assets, around leaning in and enabling. And so being able to leverage that to be able to use a new technology. This is a new technology. The U.S. should be a leader in new technologies, and we want to continue to be the rails of the global financial system. We want to be a standard setter as a country. And I think the new administration's seen that. The SEC, particularly under Chair Atkins, has been leaning into the topic.
Given everything you see in financial infrastructure and capital markets and everything like that, you know, and Jamie Dimon this week warns of more cockroaches to come. He was, I think, referring to some of the blow-ups in the credit market, the distress in that subprime auto lender. Do you agree? What do you see, and where are the risks?
Look, we've had great markets for quite a while now. If you just think about the long-term run, we've had pretty low rates, we've had credit support, we've had equity markets that have done well. Clearly, we have ups and downs. There are always going to be individual specific situations, Sarah, that we're going to see in the market, and I think we've seen that with a couple of recent examples. But I wouldn't describe it as a trend. So look, I'm a risk manager. I used to be a chief risk officer, so I certainly get risk, and we're always looking over the horizon for what else could go wrong in the world. But actually, markets are in pretty good shape, and there's a lot of fundamental support in the U.S. economy, given everything that's going on. And so we don't see a blow up around the corner. But yeah, you have to be a great manager about individual situations, because there are always going to be individual situations. If you're complacent about it, that's when the world's going to turn on you.
Of course. Well, I do have to ask you about just this. Your company was in the news this week, BNY Mellon, some new lawsuits over ties to Jeffrey Epstein. This predates you and your leadership, accusing you of maintaining a relationship with him and failing to report suspicious activities. We reached out to you guys. There was no comment. Just wanted to give you the opportunity to say anything if you want.
We don't think the suit has any merit, and we're going to contest it vigorously.
Okay. That is new. Robin Vince, thank you very much.
Yeah, it's good to be with you all.
Good to have you here.
Thank you.
CEO of BNY, which has been, by the way, a very big outperformer over the last few years against some of the other banks.